record. Yeah, thank you so much. Thank you, everybody, for joining. I know we had 47 people register with the mix up in the links and something. My team, I should take the blame for it. But we'll get started and we'll let other people's come in as soon as, they come in right there. So I'm sharing my screen and then I'll just tell a little bit about me. If you all know me a little bit, that's okay too. I'm a mechanical engineer. I'm Vinney Chopra. I've given lots of webinars. I do. I live in Danville, California, right here, and came from India with $7. I came from my MBA in marketing, sold educational books and Bibles door to door to earn tuition. I've been a husband for 45 years. We just celebrated our anniversary last week. And our two kids went to Berkeley and UCLA. We are really pride and joy of that. Monil is our brand, Monica and Neil. I have also written 3 books on Amazon and also daily podcast I have and 2 weekly shows. Active California real estate broker I was for 20 years and bought single family homes and then got into syndication and multifamily and hotels and senior livings and oil and gas. So that's a little bit about me. And if you know me a little bit, you might follow me on my YouTube channels. My books are also there on audio and my podcast and so on. I do Abundance Mindset show on Thursday mornings and then Vinny and Bo show. So I hope you might like the content. Michael is the expert in oil and gas. And that's what I wanted to introduce. He's the Speaker of the House right there. Michael, Senior Vice President at the King Operating Corporation, is experienced in results executive with 15 years, and he has deep understanding of the energy sector. That's what we are talking today. And he has successfully raised over $100 million capital in his career. So he's the main person, and I had the pleasure to go to Dallas a couple of weeks back. I met with Jay Young, the CEO, and Michael and everybody there in person, and several other syndicators like me in the country have raised millions of dollars for King Operating. So I'll give the stage to you, Michael, if that's okay, and you could
Absolutely.
share
Thank you.
yeah, please
Thank
share
you for the
your,
introduction, Vinny.
totally, totally.
You share here. All right. Yeah, thank you again. So what I'm going to be doing is just going through the investment presentation. And because we're in a unique setting where you guys can actually unmute, if you do have any questions,
Mhm.
feel free to actually fire away throughout the presentation if there are any. So this is King Operating Partners 3. This is our third fund. These are disclosures, essentially proof that we have lawyers and you would want to review these. I'll make sure that you all get a copy of the presentation where this will be included after the webinar. So this is our program. So right now we have a $100 million limited partnership fund where we are targeting a 2.3 multiple in 3 to 5 years. One of the parts I like to talk about here is two of our risk mitigation strategies that we do here at King is develop assets through partnerships. And what that means is we partner with other oil and gas producers on a lot of the wells so that we're able to expand the capital as much as possible. In oil and gas, one thing that we want to make sure we're doing is being diversified, not only with the amount of wells that we drill, but in multiple different fields. So that is how we're able to really kind of elongate the dollar for every dollar that investors put in. And then another thing that we have done in this fund is buying working interest in proven production. This is a fairly new fund. And one thing that we learned about previous funds is sometimes the ramp up period can take a little bit too much time. So right in the beginning of this fund, we purchased working interest in proven areas that we had been before so that we actually already have distributions coming in. And I was actually in a meeting today where, Vinny, this would be good for you to know, as an investor, we plan on actually paying out the first distribution next month in May. So
Oh,
distributions
wow.
Yeah, so distributions will start next month, and there will be a ramp up curve on the distributions.
Mm.
Now, this is our model. I mean, the top three, these are the main three, the main three things that investors are going to receive. A significant tax, a significant tax deduction, monthly distributions, and then an ROI on exit. We go over those more at the end, so I'll cover that at the end. But what I'd really like to talk about is our model. So our model is acquire, develop, divest. So we have actually mirrored our model off of real estate. Very similar to real estate, how you purchase a property, you fix it up. Let's say you redo the floors, you paint the walls, you increase the asset value, and then sell the asset. We do the exact same thing, but with oil leases, where we acquire the mineral lease, we drill the wells, and whenever you drill a well, especially when you're doing horizontal wells, you're now proving up the reserves on that entire acreage position, which increases the value not only of the well, but on all of the future wells that can be drilled. And then once we have drilled enough wells and built up the reserves, we look to divest the entire property. Now, this right here on the right is a little example of how that works. A PDP is essentially just a drilled well, and a PUD is a proven undeveloped, which is a well that has not been drilled yet, but because it has the same geology, we're targeting the same formation. We know that if we drill that well, we're going to get very similar to the PDP, so much so that you can actually go to a bank, take out what's called a reserve-based loan to drill PUDs. And that is our whole goal, is to be drilling PUDs and be building more PUDs, which grow the asset value on the entire acreage position. Now, these are our projects. So I'd first like to start with Bivens, and I'm not going to go too much into it here because I know it can get pretty technical. Essentially, Bivens Ranch, we have over 60,000 contiguous acres, which is very important when you're looking to sell, because if a producer is coming in, they don't want to have to piece together additional leases. They want to be able to just do it, get their rigs out there and drill, drill, drill. We also have over 120 available drilling locations in the Bivens Ranch, and we have successfully drilled the first 2 wells that we are awaiting to frack. And actually, I think what might be a better slide to show here. So these are the current wells, and this was a progress update that we just sent out to our investors quite recently. So in Bivens Ranch, well, it says currently, we just completed the drilling on the first 2 Bivens wells. We've completed and had production on the 3 Fisher County wells since January, and that's where the distribution is going to be paid out. And then we also have the 2 Hockley wells that have been drilled and fracked, but we are waiting for power to get on site to save costs. So those wells have not been turned on yet, simply because it'll be much less, it'll be more inexpensive to get power rather than to run generators and pay for the diesel fuel to do that. So I'm gonna, all right. And then with Rocker Ranch and Giddings, those are gonna be something that we look at more later on in the fund. Now, this is something a little technical. This is a Bivens Ranch mud log, and the reason I have this in there is there are 5 key elements when you're looking at the geology before you go to drill a well, and all 5 of those appeared here in Bivens. And another big strength with Bivens is the wells that we're currently drilling are actually PUDs on wells that were drilled about 15 years ago that were very strong wells, and they didn't even have the same frac technology that we have right now, as well as drilling technology. So this is just a very good indicator on the mud logs. Now, these are the 3 main benefits. So 1, you receive a 100% tax deduction. Now, year 1, you're able to get a majority of that tax deduction, typically somewhere between 75 and 85% year 1 deduction. The second is monthly distributions, where we do pay out monthly distributions, and we are targeting a 9 to 14% annual. That's not monthly. And then a total multiple of 2.3. I would say depending on the price of oil, it's probably going to be somewhere between a 2 to a 2.3x in total. And I'll have a slide that goes over that later on as well. Now, this goes more into the tax benefit. So on an investment of 200,000, for instance, let's give it a deduction factor of 75%, which we have never done less than 75% in the history of King operating. If you are in a 40% marginal tax rate, you are looking at having a $60,000 savings, or you can put, say, a 30% cash on cash. So really, it's like the day you invest in this, you're only really investing 70 cents on the dollar because of the tax savings that you're going to immediately receive. Now, this kind of does the breakdown on where the money flows. So every time we extract hydrocarbons from the earth and we sell those hydrocarbons, this is where the money goes. First, 15 to 20% always goes to the royalty owners. That's why we're able to be on their property drilling the wells. That's industry standard. Then we have the lease operating expenses. This pays for the wells and the rigs and to keep everything going. Then the remaining portion, 80% goes to the investors, where King receives 20%. Now, one thing I like about this model, and a lot of standard models, they do the 2% management fee, where regardless on how the fund does, they're going to take their 2% year after year. One thing that's great about our program is we eat what we kill, you could say, where, we have to produce in order to get this margin. Now, where King is highly incentivized is once you receive your return of initial investment back and you have been made whole, there's a waterfall that happens, and now investors receive 60% and King will receive 40. And this is the big benefit for King. Now, this is just on monthly revenue. On divestitures, meaning when we sell these assets, we're not going to be selling them all at once. We're going to probably be selling them one at a time. You will be receiving 100% of the profits from any divestitures until you have the return of your initial investment. Now, the divestiture methodology, essentially who we're going to be selling to. So there's multiple different buyers. On our larger projects like Bivens, we are looking to sell to other producers, probably targeting a mid-size oil and gas company with a valuation between 1 to 10 billion. Our project isn't big enough to be bought by Exxon or Chevron or any of the big guys. We're more of a portfolio builder for a mid-size to get bought out by one of the majors. But on some of our other projects, we absolutely could package up a series of wells and sell it to a family or to an endowment, a family office, pensions, institutions, really anyone that has an income mandate. We could look at packaging up and selling to as well, or private equity. Now, this is one of my favorite slides because people always ask, what will happen with the project if we're at $40 oil? What would happen to the project if we're at $100 oil, especially in this volatile environment we're in right now? There's a chance, we could see, I don't think oil is still going to go down to 40, but we could probably see $50 oil, or if we go to war, oil could spike up to 100. This kind of shows you how your ROI would fluctuate depending on where oil moves. Now, this has been our average monthly distributions. It has been 8.8% in regards to monthly revenue. Our average tax benefit from 2021 to 2023 was 85.4%. And I know last year's just came out as well. We were a little below on target because of leases where we were at 75%. But I believe that still puts our average at about an 82% over the last 4 years. And then a little bit about King Operating. We've been around since 1996. One thing that I do like to say, this model that we have right now, we did start in 2015. but we do have a very experienced team, which I'm going to go over here in a minute. So this is Jay Young. I know Vinney was nice enough to actually come out and meet myself and Jay Young. He's a best-selling author of this book, The Upside of Oil and Gas. And if any of you are interested in getting either an e-copy or the physical copy of his book, please let me know and I will send it out. And that really kind of talks about our model and why he changed up how traditional oil and gas investing has been. Also, Jay is the one that's been doing this for 40 years. He's a fourth generation oil man. He has the Rolodex on how we're able to find most of these projects and also has a lot of the connections to the future sellers as well. So he's going to be an extremely important part when it comes to buying and selling these particular leases. Now, our executive team, Jimmy Cleveland, Steve Mullican, Brian Dunn, they're all three very different individuals. I would say the one thing that they do have in common is they have all made large sales to private equity in the past. That's kind of the one thing that would link the three of them. But other than that, they're three very different individuals, which I think is perfect for a team to have. And then these are some of our other executives. I'd like to give a special mention to John Malden. He is a worldwide renowned economist. He's a New York Times bestseller, and he's been supporting us for the last 2 or 3 years. Another shout out I'd like to give is to Rex Gifford. He is our head of tax. He was with the IRS for a number of years, and now he has been in the oil and gas sector for the last 25. If you do decide to move forward, you have any questions regarding a K-1 or how it affects you from a tax perspective, this is the man you could jump on a call with and get all the clarification you or your CPA would need. He is a former CPA as well. And then the last is essentially the process to invest. We would send you out the DocuSign where you'd review the PPM, complete the subscription agreement. You then wire funds. From there, you get access to our portal, Juniper Square, where we upload all the monthly statements, the settlement statements, the K1s, all communication you would need would be on that portal. And then one thing that King does extremely well, better than almost any company I've ever seen, is how we update. We send out a weekly video called the 2-minute drill. That's very quick, not too long, where it becomes a burden. But that way you stay up to date on what's going on, where we're drilling, what we're doing. Then we have a monthly newsletter that goes a lot more into the details of where our barrel count is at, what we plan on doing, and getting more into the weeds. And then we did have a monthly, now we have a quarterly, it's essentially a QBR, which is a Zoom that is a 30-minute presentation where we kind of explain what we've been doing, what we plan on doing, and where we're at. And then this is essentially mine and Vinny's contact information. So if you would like to text us or you would like to get a book, that barcode right there, please scan the barcode and you would that goes directly to me and I can make sure to send you out a book.
Sure. We have some questions. Thank you so much, Michael. Again, thank you so much. Dr. Blue said, I'd like to get the ebook of the copy, Floriano, my very good friend. And, we've been together for 16, 17 years. My very big investor, Floriano and Manuela, they are joined today. I would like to receive the ebook also. Jay Miller, Courtney Muller is versed in this space. Curious if you know each other. I have a 1:30, so directly have to drop off. So Jay had asked
Oh,
different,
I wish I would have answered her.
different extraction methods or same for all. Some
So
types of fracking. Yeah, please
that's a
explain. Mhm.
that's a terrific question. So we focus almost on strictly horizontal drilling where we are going to be fracking. And if you have a few minutes before jumping off, the reason why we focus on horizontal drilling
Mhm.
is because the way technology is now, we have something out there called 3D seismic. What 3D seismic does is very similar to when you take an X-ray for your body or a CAT scan and they're able to look inside. 3D seismic is able to look into the ground and see exactly where and how many or how much hydrocarbons are actually in the earth. So when we're going down and drilling these wells, it's not guesswork. We know that the oil is there. It's more so a question of how much of that oil are we actually going to be able to extract from the earth by fracking it. Now, I know there's tons of different fracking methods, but when you take this horizontal approach, you're really taking most of the guesswork out of it. It's not like the 70s or 80s when you're doing a vertical drill and you're just, you're praying that you hit oil. We know that the
Mhm.
oil is there. It's really a question of how much are we going to extract? And of course, when you do a horizontal well, they're much more expensive. Rather than being a $500,000 vertical well, a 2 mile long horizontal might cost you $6 to $10 million to drill. But there's not there isn't there really isn't a luck factor in it in
Mhm.
regards to hoping you hit oil. And I hope that answers your question, Jay. And
Yeah.
you yeah,
Yeah. Thank you. And again, please raise your hand. Everybody's permitted to talk. So any
absolutely.
questions, please go ahead. Please go ahead.
And Dr. Blue, I will
Yes.
get you so if you could, Dr. Blue, could you please shoot me a text
Unmute.
with your
Yeah,
address?
let's see. Oh, yeah. Okay. Yeah, please send the address to, again, if you want to, what's your cell number, Michael? I'll put it
Oh,
over
ebook. Oh
here.
no, he said ebook. So myself,
Ebook. Yeah.
so I will write my cell right here,
Sure.
and then
Sure.
I have your email. So if you'd like an ebook, I will have that ebook out to you right after this
Okay.
webinar.
Please text 702-379-2755. That's Michael's, direct number. So please do text 702-379-2755, and Michael will make sure that you get the digital copy of the book right away. I think Jay
Absolutely.
had another question. Is that right, Jay? You said differences in environmental impacts. Uh, you know, any
Okay,
differences? Huh? Uh-huh.
um, so I know it's really interesting when people talk about the environmental impact of
Mm-hmm.
fracking. Uh, they're they're really, I mean, if you ever went on site and saw it, it is a little hole that's in the ground where what you're doing is you're just putting high pressured water at an extremely high rate with tons of these diesel engines that's going to
Mm-hmm.
go 10,000 feet into the earth and then go horizontal and fracture apart. So there really isn't a massive environmental impact. I mean, really, there's no environmental impact at all above the surface. And
Mm-hmm.
they do casing around it to make sure that it is controlled. So with the technology that we have now, it's it's really not from my perspective environmentally
Mm-hmm.
damaging at all. I mean, you want to talk about environmentally damaging, you look at some of these lithium mines, cobalt mines, they are just destroying um wherever they're at. I mean, they tear the
Mm-hmm.
entire ground apart. With fracking, you really don't get that.
Sure. There's one more question from Dr. Blue is what's the risk factor of the investment?
Yes, great question. So, I didn't see that. Oh, there it is. I see it.
Oh, right
So,
there. Yeah.
yes. So the two biggest risks with investing in oil and gas, especially when they're doing horizontal drilling, one, the price of oil, and two, the operator's skill. And the reason I say that is we say operator skill because as long as you have 3D seismic, which we do have, you know that the oil is there as long as you stay in zone, right? We're targeting, let's say, a 50-foot area where that drill bit has to be in. As long as that drill bit's in there and we go and frack it, the oil is there. But you need to make sure you have an operator that has a strong drilling team that can go down and execute that plan. And that is definitely probably number one. And then number two is the price of oil, right? I mean, if a black swan event like COVID happens and oil goes negative, or if oil, like back from 2015, drops down to $19 a barrel, you are not going to be profitable during those time periods. But one thing I do love about our model is we do hedge uh, by our model against the price. And what I mean by that, an example is in 2015, we did our pilot program. So we were drilling in Texas, and during that same time was when North Dakota was booming. Everyone was drilling in North Dakota. And because of that, OPEC saw what was going on and how much we were drilling and how many independent operators were just popping up out of nowhere. You guys probably remember hearing about there's not enough living spaces to meet the demand for all the people going out there. So what OPEC did, they turned on the hoses, they artificially dropped the price down to $19, put all of those companies out of business. Now at that same time, we were drilling our well, or we had already drilled our well in Texas. Now, at $19 oil, were we profitable? Absolutely not. But we were able to stay solvent because in Texas, there's a lot lower of a break-even price than North Dakota. North Dakota is a fairly new area where it's about $45 a barrel. It was back then because they didn't have the transportation or infrastructure set up. Here in Texas, we have the reservoirs, the transportation, the pipelines. So we do have a lower break even. So during that time, we were able to stay solvent. We were able to hold on, where in 19 months, the price of oil did rebound and we were able to achieve a 3x. But really the biggest risks is the price of oil and the operator skill. And what's your all-in cost of oil and barrel? I'm not sure. Can you clarify that, Kumar? Just make it a little bit more. I mean, what's like our break-even oil per barrel? Is that kind of what you're asking? So
Yeah,
what's
what's the BE cost? BE, I think is the question.
yeah, what's our break-even cost?
Break even,
Right
yes.
around, I would say it's right around $30 a barrel. Because one
$30.
thing especially when you're drilling, whenever you're drilling and the price of oil goes down, it becomes less expensive to drill. And but where we're at right now with the wells, we're right at around $30 a barrel.
Alrighty. Any other questions anybody has, please do ask in the chat, or you could speak also. Actually, we permitted everybody to speak. So
Oh,
if
there's
that's,
one more question. I see. Are there any specifics on capital loss with this investment risk? So just like
good question.
yeah, great question. I mean, I would say just like any investment, um, there is always, risk. And I think that's why we have taken the steps to be diversified.
Mhm.
The actual assets, the mineral leases and everything are included in the partnership. So it's not like you're investing in just the working interest. You're also investing in the mineral leases and all property of the partnership. So I would say, I couldn't see a world where you take a total loss because there's already assets in there very similar to real estate. But but yes, of course, there is a risk of capital. It's not a guaranteed investment. But
Mhm.
great question, Dr. Bloom. And then,
Another one, yeah, Kumar is
and
asking.
yes, that does include transportation costs. That is correct.
It does include meaning what? Oh, you mean the
No, no,
cost of the,
he meant the break even does include. So
okay, okay, yeah.
yeah, so we work, because we're in the Permian and Amarillo, we work with many vendors where we're able to sell it essentially right away. Now, like
Mhm.
natural gas, for instance, we are expecting a large amount of natural gas, and with the LNG facilities opening up, being reopened, and those are all being developed, we might look at it as not using the same vendors we have now and actually transporting it to Europe or selling it internationally just because here the price of natural gas is $4. Internationally, it's going for 3 to 4 times as much. So, down the road, that might be something that we do as well. But great, that's a great question.
All right. Any other questions?
Oh,
If
he,
there are
he
no
asked me one more.
further, yeah.
You
Okay.
mean, so do you mean how many other drilling companies have we partnered with? How many,
Hmm.
what exactly do you mean by that?
Yeah, how many drillers you work with? That's interesting. So several wells we have, right? You have, and they are being drilled. So it says
But we also
drillers
like,
you work.
we partnered with Choya on wells, we partnered with ConocoPhillips on wells, we partnered with Browning on wells. So we partnered with Rise on wells. There are a number of mid to major oil and gas companies that we
Mhm.
work with.
Okay, good, good, very good. Any other question? Please ask right there,
So the
Cap.
investment
Oh,
minimum is 50,000 and the cap, there is no cap.
there's
I
no
mean, if you
cap.
wanted to invest
Correct.
5 million, you could invest 5 million.
Sure, sure. And again, remember, you will be getting the K1 as active loss
Mhm.
against your W2 income or other active income that you could get. And it's like
Right.
75% to 85%, let's say, first year, and the rest is captured at the sale. Is that what it is, right? To
That's
make
exactly
it
right. And
100%. Yeah.
And,
Mm.
and for all of you that are used to real estate, that's the big difference, that this goes directly against your adjusted gross income. It doesn't go against your passive income. So if you're a W-2 income earner, you're a 1099, you have large capital gains, it goes against
Mhm.
all of that. So we're able to help you limit your largest expense, which is your taxes.
Mhm. Sure. I think Vera just joined in, and I think that's a little bit late, but of course, we will be putting this whole presentation on YouTube also, my YouTube channel. And Vera, nice to have you. If
Yes,
you have any
yes,
particular question,
it,
yeah, uh-huh.
yes, it will offset capital gains. Yes.
Yes, yes. I think Dr. Blue has a question, raised his hand. So could you speak also, Dr. Blue? Yeah,
Yes,
go ahead.
yes, I can.
Uh-huh.
Okay.
Yeah,
Thank you, gentlemen, for the presentation. Certainly has been
yeah.
very informative and intriguing at the same time. Here's my question. Now, you talked about the time frame. So we're looking at a
Mhm.
3-year time frame, and when does the
3 to 5
capital
years.
payout? 3 to 5 years. Okay.
Mhm.
And what is the capital payout? Is it a monthly or is it to exit at the end? I think I missed that.
So they're monthly
Oh,
distributions, and then we will be divesting assets. So the best thing I can do is kind of show you. So we're not going to sell them all at once, right? I mean, we're in multiple different fields. So as we sell a project, we will then, let's say we sell a project and it pays out 40% of what you have, then you're going to get
mhm,
40% back plus the monthly distributions of about 9 to 14%. So it's going to be a mixture of both. You're going to get it's very similar to real estate where you're going to get monthly distributions and then you're going to get a multiple, but it is going to be broken up in parts as we sell basin by basin.
Very good.
so
Thank
the
you so
return of
much.
capital, thank you so much. Return of capital will be in
Yes,
increments. That's what it is. But you will get your money back. I know I saw one slide where it says 100% money given back. Then it's 60/40. But before
correct.
that split, it's 80/20. So investors are taken care of first. And it's again active loss, not passive loss. And there is a good question. Will the K1 offset capital gains? I think the
Yes.
answer
Oh, no,
will
I
be
think I answered that.
yes.
Yes. And yes, it will.
Yeah. Totally. And then I have
Absolutely.
some techniques. Oh, technique problems with my computer. Oh, no problem, Floriano. Yeah, didn't have access to the first 18 minutes. Is it possible to have the access recording? Yes, definitely. Definitely. We will do that. Floriano, we'll make sure my team will be downloading this whole webinar and putting into my YouTube channel. We'll be sure to send that link back to, I think Vera came in late and also Floriano, and most everybody was there from the start. No worries. Sure, we will do that. Alrighty. Any other questions? I know we don't want to go, everybody time is very valuable. So if you have any other question, please do. Oh, yes, please send the YouTube link, no problem. We'll be able to, we took down all your names. So hopefully we have your email because you registered. So we'll be able to send everybody the recording also. No problem.
And I'll
If
make
there
sure to send
is
everyone an ebook as well.
ebook also, everybody will get the ebook also from the CEO of the company. And it was a pleasure. I was there a couple of weeks back, and it was fun to go there to the office and meet with them, with Michael and also Jay Young and some other, executives right there in the office. So thank you for joining. If there is no further question, then we'll go ahead and wrap it up. Thank you so much, Michael. Thank
Thank
you for
you again
taking
for
the
having me,
time.
Vinney. Absolutely. Thank you
Yes,
for having me, and thank you all for being here. Thank you.
totally. Thank you so much. Bye-bye. Bye-bye.